However, you should see a daily chart in front of you. We're going to start with the daily chart. The symbol is YM. YM is a future symbol for the Dow Jones Industrial Average. You can use the RSI on a number of different financial instruments, anything from stocks to foreign exchange and much, much more. Now, the RSI is the indicator at the bottom. What the RSI is, very simply, is it measures the relative strength, exactly as it's called, the relative strength of the market over the previous 14 periods on a scale of 0 to 100. I always use a standard setting. The setting is 14 periods back. If we look at a daily chart as we are, we count back 14 candlesticks. If we use a 4-hour chart, it would count back 14 4-hour candlesticks. I like to start with the daily charts, though, to get a good idea of the long-term trend and the RSI indication. Now, there's a couple different ways we can use the RSI. We can use it to look for reversals, and we can also use it to find breakouts and breakdowns. I'm going to show you both methods. If there's any particular currency pair, by the way, that you'd like to see, please don't hesitate, chat it in, and I'll be more than happy to jump right to that chart as well. However, without further ado, we'll get started. Now, again, the RSI measures the relative strength of the market on a scale of 0 to 100. Indications above 70 are considered to be very strong, meaning 70, 80, etc. Indications below 30 are considered to be very weak. Most of the time, you'll notice RSI stands between the 30 and 70 level. 50, obviously being the exact center, is probably the best indication of the average price of the market and the average indication of the RSI. Now, at times, the RSI will cross above 70 or below 30. When this occurs, we can look for let's first talk about reversals. We can look for reversals. As we see in the case over here, again, this is the Dow Jones Industrial Average chart, and we see at the very top of the Dow Jones Industrial Average, the futures hit highs of 10,673. That's on January 14th of this year, and the RSI crossed just barely above 70, so about 72, and then crossed below. Now, the sell signal occurs when the RSI does exactly this, when it crosses above and back below 70. We want to wait for the RSI to cross back below 70, and then we can look to sell short. When we sell short, we want to sell short as close as possible to the top, and we want to place our protective stops above the highest highs that the market was able to achieve, plus a little bit of breathing room. I'm going to explain exactly why. Now, notice how the market, again, we hit highs of 10,673 on January 14th. The RSI was just above 70 and then quickly shot back down. Then, a few days later, we hit 10,681. Actually, a few points higher in the futures. However, notice the difference in the RSI indication. As the Dow Jones Industrial Average actually made a few points of a higher high, the RSI was not above 70. In fact, we went down to about 65. This divergence, well, I gave it away, this difference or disagreement in the chart is exactly what you want to look for when we're looking for reversals. It's called divergence. Divergence, in other words, disagreement. The market makes a little bit of a higher high, but yet the RSI makes a lower high. Market makes a high of 10,673, a little bit of a higher high, 10,681. The RSI was at 72 and then went down to around 65. That disagreement shows us, well, for lack of better words, not everything is agreeing with our trade, and therefore the probability is of a reversal to the downside. Now, it's very important, and like we said before, we want to place our protective stops above the highs. The highest high is 10,673. Again, the market went up to a little bit of a higher high than that. We want to place our protective stops above those highs. Give yourself a good amount of breathing room. What's a good amount of breathing room? Well, it really does depend what financial instrument we're looking at and under what time frame. But you want to give yourself some room. So if the market does make a slightly higher high, our protective stops don't get triggered. If our protective stops are placed 1 point above, we would have been stopped out. However, 10 points above 20, we would not have. And we want to look for this divergence, RSI indicating lower high when the market makes a similar high, maybe even a little bit of a higher high, and then we look for a reversal down back to the downside. Where do we take profits? Well, we can take profits according to the charts. That's always a good idea. But as a general rule of thumb, if the RSI, or I should say when the RSI comes back down to around 50, that's a good spot to take profits. Why? Because on the scale of 0 to 100, 50 is the exact center. And the 50 line, if you think about it like a moving average, the market has the greatest probability to return back to the 50 level. So if we're going to sell short around 70, then we want to take profits when the RSI hits 50. In this case, the Dow came down and the RSI hit 50. The Dow Jones Industrial Average was able to accomplish a nice turn back to the downside. Again, we can use also technical analysis, trend lines, Fibonacci, etc., to approximate where the next support or resistance might be. However, I do not always like to wait for the market to come, or the RSI, I should say, to come all the way back down to 30, because we don't know necessarily if that's going to happen.